Wealth isn't about luck, it's about psychology. Master your fear, greed, and impatience to break the cycle of financial failure once and for all. Wealth isn't a lottery ticket, it's a psychological war fought and won inside your own mind. The market doesn't make you poor. Your reaction to the market can lead to financial hardship. Your fear, your greed, your impatience, these are the enemies that are stealing your future. This book is not about stock tips or secret formulas. It is a training manual designed to rewire your brain and crush the emotional reactions that have kept you trapped. Master your mind, and you will master your money. The war for your wealth starts now. Commit to this war by subscribing to this channel. This is your new training ground. Before we begin, a mandatory notice. The content in this audiobook is for educational and entertainment purposes only. It reflects a specific philosophy on wealth psychology, not direct financial advice. I am not a licensed financial advisor. The ideas presented here are principles for mindset development. All investment carries risk, and you are solely responsible for your own decisions. Always consult with a certified professional before making any financial moves. Let's begin. Chapter 1. Your brain is your biggest financial liability. Let's begin with the most critical truth about building wealth. It has nothing to do with your intelligence, your background, or the secret stock tips you think you need. The single greatest obstacle standing between you and financial freedom is the 3-pound machine between your ears. Your brain. It is your biggest asset in every other area of your life. But in the world of investing and capital allocation, it is your biggest financial liability. Every instinct, every gut feeling, every emotional jolt it produces is a programmed error. It is a bug in your operating system that will cost you everything if you don't take immediate action. This is the central lesson of this entire book, so listen closely. You are not fighting the market. You are fighting your own biology. Think about how your brain was designed. For hundreds of thousands of years, it evolved for one purpose: immediate survival on the plains of Africa. It is a masterpiece of threat detection. See a shadow that looks like a lion? Don't analyze it. Don't check its stock price. Run. That immediate, unthinking fear response is what kept our species alive. See a rare bush full of ripe berries? Don't think about long-term agricultural strategy. Gorge on it immediately. That rush of greed, that desire for more, right now is what kept you from starving. Fight or flight, fear and greed. These were the perfect tools for a world of immediate physical threats. But the modern financial market is not the savannah. A 10% drop in the S&P 500 is not a lion in the grass. A soaring cryptocurrency is not a life-saving fruit. Yet your brain, your ancient lizard brain, cannot tell the difference. It sees the red on the screen and screams, "Danger! Flight!" It sees the green arrow of a skyrocketing stock and screams, "Opportunity! Fight for it!" This is the mismatch that keeps people poor. Let's make this real. Let's go back to 2008. The global financial system is on the brink of collapse. The headlines are pure terror. Your neighbor, a financial advisor, just lost his job. The news is on 24/7, showing stock charts that look like cliffs. Your retirement account, which you've diligently funded for a decade, is down 40%. What does your brain do? It floods your system with cortisol. It triggers a primal fear you can feel in your stomach. It screams, "Sell! Sell it all before it goes to zero. Protect what's left." Millions of people listened to that voice. They logged into their accounts with trembling hands and sold everything at the bottom of the market. They turned a temporary paper loss into a permanent, catastrophic financial reality. They chose to react, and in that moment of relief, they sealed their fate. Now let's look at the disciplined investor. They saw the same headlines. They felt the same knot of fear in their stomach. Their biology was screaming the same thing, but they had done the work. They understood that you are not fighting the market, you are fighting your own biology. They looked at their pre-written plan. The plan said, when the market drops 20%, I will rebalance my portfolio by buying more stocks. It was a simple, logical rule made in a moment of calm. So what did they do? While everyone else was selling in a panic, they executed their strategy. It's not about what you feel, it's about what you execute. They logged in and bought more. It felt wrong. It felt terrifying. It went against every fiber of their being, but they didn't need anyone's permission to execute their plan. They did it. Now let's fast forward. The market didn't go to zero. It recovered. It roared back to life. The person who panicked, sold, locked in their losses, and then was too terrified to get back in, missing the greatest bull market in a generation. The disciplined investor who bought when there was blood in the streets didn't just recover. They saw gains that changed their family's destiny. The same market event created a pauper and a king. The only difference was psychological control. We saw the same movie play out in 2020 during the COVID crash. A sharp, terrifying drop, the reactors sold, the executors bought, the reactors lost, the executors won. This pattern will repeat for the rest of your life. Every single time you will be presented with a choice. You can either obey your outdated biology or abide by your disciplined plan. You have an option with your capital, and that choice will determine your entire financial future. Your fear is a corrupt signal. It is designed to make you sell at a low price. Your greed, the fear of missing out, is also a corrupt signal. It's designed to make you buy high, piling into an asset at the peak of its hype cycle, right before the insiders sell to you. These two impulses work together in a perfect storm to ensure you buy high and sell low, transferring your wealth to those who have mastered their own psychology. The first step to winning this war is to acknowledge. Chapter 2. Kill your fear before it kills your portfolio. Fear is the assassin of wealth. It is quiet, patient, and ruthlessly effective. It doesn't arrive with a thunderclap. It comes as a whisper of doubt, a suggestion of caution that masquerades as wisdom. It tells you to wait, it advises you to conduct further research, it promises you safety while it silently steals your future. In the last chapter, we identified your biological programming as your greatest liability. Now we isolate and attack its most potent weapon. Fear in the financial world wears three masks. The first is the most obvious: panic selling. We saw this in 2008 and 2020. It's the visceral, gut-wrenching terror that makes you liquidate your assets at the worst possible moment. It's a loud, screaming fear, and while it's destructive, it's also easy to identify. But the other two forms of fear are far more insidious. The second mask is analysis paralysis. This is the fear that disguises itself as prudence. It's the voice that says, I need to understand this better before I invest. Or, the market seems volatile. I'll wait until things are clearer. You spend weeks, months, or even years reading articles, watching videos, and listening to experts, all while feeling productive, but you never act. You are waiting for certainty in a world that guarantees none. Clarity never comes. The perfect moment never arrives. And while you are researching, the market is moving, compounding is working for others, and you are left at the starting line, confusing motion with progress. The third mask, and perhaps the most common, is risk aversion disguised as being safe. This is the fear that convinces you to hold your life savings in cash, sitting in a bank account earning virtually nothing. You feel safe because the number doesn't go down. But you are blind to the invisible theft of inflation, which erodes your buying power every single day. You are blind to the massive opportunity cost of not participating in the greatest wealth creation engine in history. Your fear of losing $1 has cost you $10 in potential gains. Let's make this brutally clear. Imagine an investor in 2011. They survived the 2008 crash and they are terrified. They sold everything and now have $100,000 in cash. Their fear tells them, the system is fragile. Wait for the next crash. Buy at the real bottom. So they wait. They watched the market recover in 2012. It's a trap, their fear says. They watched it climb in 2013 and 2014. It's a bubble. It's unsustainable. They watch it continue to rise through 2017, 2018, 2019. Every year, their fear finds a new excuse. European debt crisis, trade wars, political uncertainty. For an entire decade, their $100,000 sits in a bank account, a monument to their fear. What was the price of this safety? Over that decade, a simple, boring S&P 500 index fund returned well over 250% with dividends reinvested. Their safe $100,000 would have become more than $350,000. Their inaction, their decision to obey their fear, was not a safe choice. It was a financial decision with a price tag of $250,000. They didn't lose money, they lost a lifetime of gains. They lost time, the one asset they can never get back. The market rewards courage, not comfort. Act based on your plan, not your fear. So how do you kill this fear? You don't fight it with emotion. You don't try to be brave. You crush it with logic and systems. First, you must redefine fear when you feel that knot in your stomach. Train yourself to view it not as a signal to stop, but as an opportunity to consult your plan. Fear is the trigger to look at your rules, not the news. Your feelings are irrelevant. Your plan is everything. It's not about what you feel, it's about what you execute. Second, you must build a system that makes courage irrelevant. Automate your investments. Set up a non-negotiable automatic transfer from your bank account into your chosen index funds every single week or month. This action is the ultimate weapon against fear. It ensures you are buying when the market is high, when it's low, and when it's crashing. It turns market volatility, the very thing you fear, into your greatest ally through dollar-cost averaging. You don't need courage to invest when a machine does it for you. Third, you must constantly calculate the price of your comfort. If you have a significant amount of cash sitting on the sidelines, do the math. Assume a conservative 7% annual return from the market. Calculate what that inaction is costing you every single year. Stare that number in the face. That is the true cost of fear. You have a choice with your capital. Let it be eaten by inflation in the name of comfort, or put it to work to build your freedom. The experts in the media are paid to amplify your fear. The headlines are designed to make you react, but you don't need their permission to execute your plan. Your plan is your shield. Your system is your sword. Your job is not to predict the future. Your job is to execute your system relentlessly, regardless of the noise. That is the key to long-term wealth. Fear promises safety but delivers only regret. It is the architect of the poorhouse. You must see it for what it is, a biological echo from a bygone era, a corrupt signal that has no place in your financial decision-making. Every time you feel it, you must hear this voice instead. The market rewards courage, not comfort. Act based on your plan, not your fear. You have faced down the enemy of fear. You have the tools to dismantle it systematically. But fear has a dangerous twin. It's an emotion that feels good, that promises the world, and that is just as effective at destroying your portfolio. Chapter 3. Starve your greed, feed your discipline. If fear is the assassin that works in the shadows, greed is the siren that lures your ship onto the rocks with a beautiful song. It feels good. It feels like ambition. It feels like an opportunity. And that is what makes it infinitely more dangerous. Fear tells you to run from a threat. Greed tells you to run toward an illusion. Both lead to the same destination: financial ruin. Greed is the twin of fear. They are two sides of the same corrupt biological coin. While fear screams, "Sell low," greed whispers, "Buy high." It is the frantic, desperate need for a shortcut. It is the belief that you are smarter than the system, that you have found the one secret trick that will allow you to bypass the hard work and discipline that wealth actually requires. It manifests as FOMO, the fear of missing out, an emotional assault that is amplified 1,000,000 times over in our hyper-connected world. Let's paint a picture you know all too well. It's late 2021. You're scrolling through social media. You see a post from a friend or even a total stranger with a screenshot of their brokerage account. They've seen a 500% increase in a cryptocurrency featuring a dog's face. They turned $1,000 into $5,000 in 2 weeks. The comments are a frenzy of rocket emojis and talk of diamond hands. Your logical brain knows this is gambling. You have a plan. You plan to invest a set amount every month into a diversified index fund. It's a good plan. It's a proven plan. But now, a new voice enters your head. It's the voice of greed. It says, "Look how much they're making. Your index fund only went up 10% last year. You're falling behind. You're missing out. You're a fool for being so safe." This voice is seductive. It preys on your insecurity. So you break your rules. You have a choice with your capital, and you choose to abandon your plan for a lottery ticket. You download a new trading app, transfer $5,000 you can't afford to lose, and you buy the coin at its all-time high. For a moment, you feel a euphoric rush. You're in the game. You're part of the movement. You check the price every 5 minutes, dreaming of becoming a millionaire overnight. And then the music stops. The hype fades. The insiders who created the coin are selling their massive positions to unsuspecting investors like you. The price collapses by 30% in a day, then 50%, then 80%. Now, where is the voice of greed? It has vanished. And in its place, the familiar cold voice of fear returns. The same voice from Chapter 2. It screams, "Sell! Sell before it goes to zero. Get out with what little you have left." So you sell. You lock in a $4,000 loss. You stare at the screen, shattered. What just happened? You were the victim of a perfect psychological trap. Greed convinced you to buy high, and fear convinced you to sell low. You willingly participated in a massive transfer of your wealth to someone who understood your psychology better than you do. This is the story of meme stocks, the story of speculative frenzies. It is a story as old as markets themselves, and it will happen again and again. The lesson here is brutal but simple. Slow growth is sustainable growth. Fast gains are a trap. Every time you see an opportunity that promises unbelievable returns with little effort, you are not looking at an investment. You are looking at a trap designed to harvest capital from the greedy and undisciplined. The antidote to greed is not to stop wanting wealth. It is to commit to a process that actually builds it. The antidote is discipline, embodied in a boring, unsexy, relentless plan. When the world is screaming about a new stock that's going to the moon, the disciplined investor is checking to make sure their automatic monthly investment into their index fund went through. It's not about what you feel. It's about what you execute. You don't need the validation of a Reddit forum. You don't need their permission to execute your plan. Discipline is the act of choosing the proven path over the exciting one. It's the understanding that true wealth is not built in a week of frantic trading. It's built over a decade of consistent saving and investing. It's built in the quiet moments when no one is watching. That's the key to long-term wealth. You must starve your greed. When you feel the pull of FOMO, recognize it for what it is, a biological signal of herd behavior. The herd is almost always running toward a cliff. You must consciously choose to walk the other way. Unsubscribe from the newsletters that promise 10-bagger stocks. Mute the social media accounts that flash speculative gains. Protect your psychological environment just as you would protect your home. Your ambition is a powerful force. Do not waste it chasing illusions. Channel that fire into your savings rate. Channel it into the consistency of your automated investments. Channel it into building a system that cannot be derailed by emotion. Slow growth is sustainable growth. Fast gains are a trap. Burn that into your mind. You have now learned to identify and reject the two great emotional enemies of wealth, fear and its seductive twin, greed. You have chosen the path of logic and discipline. But these two emotions are fueled by a deeper, more fundamental flaw in our psychology, a flaw that silently taxes people with low incomes and the middle class every single day. We must now conquer the very human desire for now. Chapter 4. Impatience is the tax on the poor. We have confronted fear, and we have starved greed, but we must now attack the root that feeds them both. The deep, primal, and profoundly destructive need for now. Impatience. It is not just a personality flaw. It is a hidden tax systematically levied on those who fail to grasp the fundamental mathematics of wealth. And it is the single most powerful reason the rich get richer, while everyone else struggles to make progress. Our world is built to destroy your patience. Same-day shipping, instant streaming, on-demand everything. Your brain has been meticulously trained to expect immediate gratification. This training serves corporations and marketers perfectly, but it is catastrophic for your financial future. Because the most powerful force in the universe, the engine of all significant wealth, does not work on your schedule. It operates on its own schedule, with time as its primary fuel. That force is compound interest. Albert Einstein supposedly called it the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it. You are paying for it. Every time you chase a fast gain, every time you abandon a strategy because it's not working fast enough, you are paying the tax of impatience. Let me make this so clear that it haunts you. Let's look at two investors, Investor A and Investor B. Investor A starts at age 25. She is disciplined but not rich. She sets up an automatic investment of just $500 every month into a simple, low-cost index fund. She does this without fail every single month for 40 years until she is 65. Rain or shine, bull market or bear market, it's not about what you feel, it's about what you execute. Now meet Investor B. He's a procrastinator. He thinks he has time. He spends his 20s and early 30s on other things. He finally gets serious at age 35, 10 years after Investor A. He knows he's behind, so he decides to be aggressive to catch up. He invests $1,000 every single month, double the amount Investor A is investing. He does this diligently for 30 years until he is also 65. Let's look at the numbers. Investor A invested $500 a month for 40 years. Her total out-of-pocket investment was $240,000. Investor B invested $1,000 a month for 30 years. His total out-of-pocket investment was $360,000. He invested $120,000 more than she did. He was more aggressive. He tried harder to catch up. So who has more money at age 65? Assuming an average 8% annual return, investor B, the one who invested more, ends up with about $1.36 million. A fantastic sum. However, investor A, who started earlier and invested less, ends up with over $1.57 million. Read that again. She invested $120,000 less and ended up with over $200,000 more. Why? During those first 10 years, the period when investor B was waiting, her money began to work for her. Her early dollars had 4 decades to multiply. His dollars had only 3. She harnessed the full explosive power of the compounding curve. He only caught the latter half. He paid a $200,000 tax for a 10-year delay. That is the brutal, unforgiving price of impatience. Time is your greatest asset. Do not trade it for speed. This is not an opinion. It is a mathematical certainty, and your impatient brain is programmed to ignore it. You want the result now. You check your portfolio daily, getting a useless jolt of dopamine or cortisol from meaningless short-term fluctuations. This is like planting a seed and then digging it up every morning to see if the roots have grown. You are destroying the very process you claim to want. Patience is not passive waiting. It is an active, strategic decision. It is a weapon. It is the discipline to follow your plan when every fiber of your being and every headline in the world is screaming for you to do something. That's the key to long-term wealth. So how do you cultivate this weapon? First, you stop measuring in days and start measuring in decades. Your goal is not to have a good week in the market. Your goal is to be wealthy in 20 years. Frame every decision against that timeline. Second, you focus on the process, not the results. Did your automatic contribution happen this month? Yes? Then you won. That is the only metric that matters. The market will do what it does. You have a choice with your capital, and your only option is to deploy it consistently. Third, you must reduce your information intake. Stop watching the financial news. Stop checking your balance. You are a long-term investor, not a day trader. Set a schedule. You are allowed to look at your portfolio 4 times a year. Once a quarter, that's it. Give your money the time and the silence it needs to grow. The game is long. Those who demand a quick victory are guaranteed a long-term defeat. They are paying the tax, but you will not be one of them. You will let time serve you, not enslave you. You will plant your seeds, water them with consistent contributions, and have the discipline to let them grow. Time is your greatest asset. Do not trade it for speed. You have learned to master the psychological poisons of fear, greed, and impatience. Now it's time to build the machine that makes them irrelevant. Chapter 5. Automate your wealth. De-animate your emotions. You have stared into the abyss of your own psychology. You have identified fear, greed, and impatience as the enemies that live inside you. You understand that your feelings are corrupt data, and your willpower on its own is not enough to win a lifelong war. A soldier who relies only on bravery will eventually fall. A soldier who relies on a superior system and superior weapons becomes invincible. This chapter is where we build your weapons. This is where we construct the system. We are going to build a machine, an unemotional, relentless wealth-building machine that works for you every single day, whether you are feeling brave or terrified, greedy or cautious. This machine has one purpose: to execute your financial plan flawlessly, without the interference of human emotions. Every day you wake up with a finite amount of willpower. You use it to get out of bed, to deal with traffic, to handle problems at work, to make dozens of small decisions. By the end of the day, your willpower is depleted. This is called decision fatigue. The emotional, reactive part of your brain takes over. This is when you make poor food choices, skip the gym, and, most critically, make disastrous financial decisions. The undisciplined person relies on their depleted willpower to save and invest. They think, "I'll invest what's left over at the end of the month." But by the end of the month, there is nothing left. Their emotions and fatigue have spent it all. You will not do this. You are going to build a system that gets to your money before your emotions do. You will pay your future self first. Here is the blueprint for your machine. It has 3 simple components. You will build it this week, not next month, not when you feel ready. You will do it now. You don't need their permission to execute your plan. Component 1, the fortress. You will open a separate brokerage account at a low-cost institution. This account is not for your daily banking. It is not for your emergency fund. This is your wealth-building account. You will give it a name that means something to you. The Freedom Fund, the Empire Account, the Future. This creates a psychological barrier. Money that goes into this fortress does not come out until it's time to fund your freedom. Component 2, the conveyor belt. This is the most critical step. You will log into your primary checking account, the account where your paycheck is deposited, and you will set up an automatic recurring transfer to your new brokerage account. This is non-negotiable. It should happen the day after you get paid. You decide on the amount, $100, $500, or $1,000 a month. It doesn't matter. What matters is that it is automatic. You have a choice with your capital, and you are making that choice once, perfectly, right now, instead of trying and failing to make it 100 times later. This conveyor belt ensures your capital is moved to the fortress before you can sabotage yourself. Component 3, the worker. Inside your brokerage account, you will set up a second automatic instruction. You will command the account to automatically invest the cash from the conveyor belt into your chosen asset. For 99% of you, this will be a single, low-cost, broad market index fund, like one that tracks the S&P 500. You are not picking stocks. You are not timing the market. You are buying the entire market consistently forever. This worker takes your capital and puts it to work, building your wealth without any further instruction. That's it. That is the entire machine, a fortress, a conveyor belt, and a worker. Once built, it runs on its own. It is immune to the headlines. It doesn't care about politics. It doesn't feel fear during a market crash. It simply buys more shares at a lower price. It doesn't feel greedy during a bubble. It simply buys at its scheduled time, just as it always does. It is executing your perfect plan while you live your life. It's not about what you feel, it's about what you execute. And this machine executes flawlessly on your behalf. This is how you turn your greatest liability, your emotional brain, into an irrelevant bystander. You are no longer in the business of making investment decisions. You are in the business of building and funding your machine. Your only job is to protect the conveyor belt and, over time, increase the amount it carries. That's the key to long-term wealth. You are de-animating your emotional reactions and animating your capital. You are taking yourself out of the equation. This is the ultimate secret of the wealthy. They do not rely on discipline, they build systems that enforce it. So build your machine. Build it and let it run. Trust the system, not your instincts. Let it stack your bricks one by one, day after day, year after year, until you have built an unbreakable fortress of financial freedom. Build a machine that creates your wealth. Then, let the machine work. You have now created a system to channel your income into wealth-building assets. But what about the money before it even gets to the machine? What about the daily leaks in your financial ship that are caused by the same emotional triggers? Now we must turn our attention from your portfolio to your spending. Chapter 6, The Hidden Tax of Emotional Spending. In the last chapter, we built your wealth machine. It is a powerful engine designed to run for decades, automatically channeling your capital into assets that will make your freedom. But an engine, no matter how powerful, is useless without fuel. And your emotions, the very ones we've often sidelined in our investment lives, are actively draining your fuel tank every single day. This is the hidden tax of emotional spending. We are not talking about your rent, your groceries, or your essential bills. This is about the money you bleed, dollar by dollar, in an attempt to manage your feelings. It is the $50 you spend on takeout after a stressful day at work because you deserve it. It's the $200 gadget you buy online when you're bored. It's the expensive clothes you buy to project an image of success you haven't yet earned. Each of these purchases is a transaction that trades your future freedom for a fleeting 5-minute dopamine hit. Understand this: entire industries worth trillions of dollars exist for the sole purpose of triggering your emotional insecurities. Marketing is not your friend. It is a sophisticated psychological weapon designed to make you feel inadequate. It creates a problem you didn't know you had and then sells you the temporary solution. It preys on your boredom, your envy, your stress, and your desire for status. It is a constant assault on your discipline. You must reframe your relationship with money. You must stop seeing it as a tool for comfort and start seeing it for what it is: a tool for building power. Every dollar is a soldier. Send it to war for your freedom. Don't sacrifice it for your feelings. When you have a bad day and splurge on an expensive meal, you are not truly rewarding yourself. You are sacrificing a platoon of soldiers to make yourself feel better for an hour. When you buy that new phone out of boredom, you are not upgrading your life. You are executing soldiers who could have been fighting on the front lines of compounding for the next 30 years. You are choosing a moment of relief over a lifetime of independence. You have a choice with your capital, and you are consistently choosing to spend it on your emotions instead of your future. Let's calculate the true cost of this hidden tax. Let's say your emotional spending habit amounts to just $50 a week. A couple of expensive coffees, a lunch you didn't need, and an impulse buy online? It feels like nothing. It's only $50. But that is $200 a month. That is $2,400 a year. Now, what happens if instead of sacrificing those soldiers, you sent them to your wealth machine? What if you invested that $2,400 every year into your index fund? Let's assume a conservative 8% average annual return. After 10 years, that harmless $50 a week habit would have become over $34,000. After 20 years, the amount would have grown to over $109,000. After 30 years, that small, insignificant leak would have cost you more than $271,000. $250,000, gone and sacrificed not for an asset, not for an investment, but for a series of fleeting feelings that you can't even remember. That is the hidden tax. That is the price of reacting to your emotions with your wallet. That's the key to long-term wealth. Understanding this brutal math. So how do you fight back? You use a system, not willpower. It's not about what you feel, it's about what you execute. First, implement the 72-hour rule. For any non-essential purchase over a certain limit, say $100, you are not allowed to buy it on impulse. You must write it down on a list and wait for 72 hours. This act of pausing allows the emotional fog to clear. The dopamine urge will fade, and your logical brain will take over. After 72 hours, you will look at that item and ask one question: is this purchase more valuable than the future freedom it will cost me? Most of the time, the answer will be a resounding no. Second, conduct a spending audit. For 1 week, track every single dollar you spend. At the end of the week, go through the list with a red pen. Circle every purchase that was driven by an emotion, stress, boredom, celebration, or envy? Be brutally honest with yourself. Stare at the total. That is the amount of fuel you are denying your wealth machine. You are the commander of an army. Your dollars are your soldiers. You would not send your best troops on a suicide mission for no reason. So why do you invest your capital every day? Every dollar must have a mission. Is its mission to buy you a coffee? Or is its mission to buy you one more second of a future where you don't have to work? You built the machine to automate your investments. Now you must build the discipline to control your spending. You must seal the leaks in your financial foundation. We have addressed the large-scale decisions of investing and the small-scale decisions of spending. Now it is time to zoom out and install a new operating system for your entire life. One that eliminates the need for constant draining decision-making altogether. Chapter 7. Stop making decisions. Start executing a plan. We have built your machine. We have sealed the leaks. You now have a system for investing and a strategy for disciplined spending. But every system has a point of failure, and that point is you. It is the moments where you allow yourself to decide, to debate, to reconsider. The single greatest leap in performance in any field is the leap from being a constant decision maker to being a relentless executor. Think about the highest performers in the world. CEOs, elite athletes, military commanders, they are obsessed with eliminating trivial decisions. They wear the same outfit every day. They eat the same meals. They follow the same rigid morning routine. Why? Are they not smart enough to choose a shirt? Number. It is because they understand that willpower is a finite resource. They treat their mental energy like ammunition, and they refuse to waste a single round on a target that doesn't matter. They save their full cognitive power for the few critical decisions that will define their success. Meanwhile, the average person wastes 99% of their mental ammunition on noise. What should I wear? What should I eat for lunch? Should I buy this $5 coffee? Is now a good time to invest? Should I check my portfolio again? It is a constant state of low-grade, high-frequency decision-making that leaves you exhausted and vulnerable. You must apply this elite mindset to your financial life. You are wasting your energy. You are debating things that should not be up for debate. You are not a market analyst. You are the executor of your own plan. Your job is not to predict the market, analyze geopolitical events, or have an opinion on the Federal Reserve's interest rate policy. Your job is to execute the plan you created in a moment of cold, clear logic. What is this plan? It is your personal financial constitution, a one-page document you will write this weekend. It is the set of rules that governs your capital. It is the operating system you will now run your life on. It will contain 4 simple sections. Section 1. The mission. What is the purpose of this wealth? Be specific. Is it to retire at 55? Is it to be financially independent in 20 years? Is it to build a $1 million portfolio to pass on to your children? Write it down. A mission that is not written down is a daydream. This is your why. It is what you will read when fear or greed tries to take control. Section 2. The Prime Directive. This is your savings rate, the single most important number in your financial life. You will define it as a non-negotiable percentage of your income. I will save and invest 20% of every paycheck without fail. This is not a suggestion. It is a law. It is the directive that feeds your wealth machine. Section 3. The Strategy. This is your investment choice. Be brutally simple. All invested capital will be allocated to a low-cost S&P 500 index fund or a global index fund. That's it. You are not a stock picker. You are not a genius. You are buying the entire market at a low cost. This decision is now made. It is permanent. You will not revisit it every time you hear about a new exciting opportunity. Section 4. The Rules of Engagement. This is your battlefield doctrine, a simple list of I will and I will not statements. For example, I will never sell assets during a market panic. I will increase my investment amount every time I get a raise. I will not take financial advice from social media or the news. I will rebalance my portfolio once a year on my birthday and at no other time. This document is your new boss. It is cold. It is unemotional. It does not care about your feelings, and it will make you rich. Once it is written, your job of deciding is over. Your new job is to execute. It's not about what you feel, it's about what you execute. When the market crashes, you don't need to decide what to do. You look at your plan. The plan says you either do nothing or buy more. So you do that. End of story. You don't need their permission to execute your plan. The person who debates whether to buy the $5 coffee is the same person who debates whether to sell during a correction. Their mind is a sea of chaos. Your mind will become a place of quiet, disciplined order. Your energy will be spent on things that matter, increasing your income, developing your skills, living your life, knowing that your financial future is running on a flawless, predetermined track. That's the key to long-term wealth. From this day forward, stop asking, "What should I do?" and start asking, "What does my plan say?" This shift will change everything. It will free up more mental energy than you can imagine. You are not a market analyst. You are the executor of your own plan. You have your mission, you have your system, you have your plan. You are now armed, but the enemy, your own biology, is clever. It won't just attack you with raw emotion. It will attack you with flawed logic and invisible mental traps that feel like rational thought. We must now learn to see the bars of our own cognitive prisons. Chapter 8. Escape the prison of your financial biases. You have a plan, you have a machine, you have declared war on your emotional reactions. You believe you are now operating on pure logic. You are wrong. Your enemy is more subtle than that. Having a plan is like building a fortress, but your own mind has hidden saboteurs inside the walls. These saboteurs are not raw emotions like fear or greed. They are cognitive biases, flaws in your thinking that masquerade as rational thought. They are the invisible bars of a prison you don't even know you're in. These biases are mental shortcuts your brain uses to make sense of a complex world. They work well for day-to-day survival, but in finance, they are systematic wealth-destroying bugs. We must find, identify, and eliminate them with extreme prejudice. The first saboteur is confirmation bias. This is the tendency to seek out, interpret, and remember information that confirms your pre-existing beliefs. Once you decide you like a stock or an investment, your brain will automatically filter reality to support that decision. You will click on the articles that praise it. You will watch the videos that predict its success. You will ignore the warnings, dismiss the red flags, and label all negative data as noise or fear-mongering. Imagine you buy a speculative tech stock based on a good feeling. The stock immediately drops 15%. Instead of reevaluating your thesis, your confirmation bias kicks in. You go online and search for why stock name is a great long-term buy. You find a forum of other bag holders who, just like you, are reinforcing each other's delusion. After reading their posts, you feel validated and are more likely to make a purchase. You are actively participating in your own deception. You must fight this. You must become the harshest critic of your own ideas. Before you ever invest in anything, you must deliberately seek out the most intelligent arguments against it. Your feelings are not financial facts. The second saboteur is loss aversion. Your brain is wired to feel the pain of a loss approximately twice as powerfully as the pleasure of an equivalent gain. This single bias causes a cascade of terrible decisions. It's why people refuse to sell a losing investment. They look at a stock that's down 50% and think, "I'll sell it when it gets back to even." Getting back to even is an emotionally comforting idea that has zero financial merit. The market doesn't know or care what price you paid. The capital trapped in that dead asset could be redeployed into a productive one, but you can't stomach the act of admitting a loss. Conversely, loss aversion makes you sell your winners too early. You have a stock that's up 30%. You get nervous. You want to lock in the gain before it disappears. So you sell your best performing asset and hold on to your worst, all because the emotional pain of a potential loss outweighs the rational decision to let your winners run. You are systematically cultivating a portfolio of losers. It's not about what you feel, it's about what you execute. And you must execute the plan, even if it means taking a calculated loss. The third and most powerful saboteur is herd mentality. For millennia, staying with the tribe meant survival. Being cast out meant death. Your brain is therefore hardwired with a deep, primal urge to follow the crowd. In the financial world, this is a recipe for disaster. When you see everyone piling into a meme stock or a hot real estate market, your instinct screams, "Don't get left behind." You feel social pressure to join in, but you must understand a fundamental truth. By the time an investment is popular enough for the herd to be stampeding towards it, the smart money has already been made. The herd arrives at the peak, providing the liquidity for the early, disciplined investors to sell into. The herd buys high, and when the panic inevitably sets in, the herd sells low, together, trampling each other on the way out the door. You must train yourself to see the herd not as a source of safety, but as a contrary indicator. When the news is euphoric and everyone you know is a financial genius, it is time for extreme caution. When the news is apocalyptic and everyone is terrified, it is the time of maximum opportunity for those who are executing their plan. The herd is always wrong. Escaping these biases is not easy. It requires a conscious, deliberate effort to think unnaturally. You must constantly question your own motives. You must build systems of accountability. And you must trust your pre-written plan more than you trust the thoughts in your own head. You are the executor of your own plan, not the slave to your own flawed cognition. You have now learned to see the walls of your prison. You have the keys to unlock the door. This intellectual freedom allows you to ignore the siren song of the crowd and the whispers of your own biases and instead walk the one path that leads to guaranteed long-term wealth. It's a path the herd finds excruciatingly dull. Chapter 9: The Unsexy, Unstoppable Power of Boring Consistency. The world sells you a lie. The financial media, social media gurus, and the entire industry are built on this lie. The lie is that wealth is exciting, that it's about finding the next 10-bagger stock, timing the market perfectly, and making brilliant, genius-level moves that no one else sees. This lie is designed to keep you engaged, to keep you clicking, to keep you trading, and to keep you poor. Because every time you engage with the excitement, you pay a fee, you take a risk, and you deviate from the one true path to wealth. That path is boring. It is brutally, relentlessly, and magnificently boring. And you must learn to love it. You must embrace the unsexy, unstoppable power of consistency. Excitement is expensive. Boring is profitable. Excitement is a drug. The thrill of a quick win, the adrenaline of a volatile stock, the ego boost of telling your friends you got in early. These are emotional payoffs, not financial strategies. Your brain craves this stimulation, but the market is the house, and it is designed to systematically extract capital from players who are there for the thrill of the game. The disciplined investor is not a player. They are the owner of the casino. They don't gamble, they just collect their profits day after day from the predictable mathematics of the system. Building wealth is not a sprint. It is the slow, methodical laying of bricks, one brick at a time, every single month, for decades. The day trader attempts to construct a mansion overnight, but it ends in a single massive explosion. They almost always end up with a pile of rubble and a hole in the ground. The consistent investor lays one brick, then another. For the first few years, it doesn't look like much. It's just a foundation. It's boring. Their friends who are gambling on crypto might be driving a new car. It doesn't matter. The consistent investor just keeps laying bricks. It's not about what you feel, it's about what you execute. After a decade, they have walls. After 2 decades, they have a fortress. After 30 years, they have an empire that the gambler, now broke, can only stare at in wonder, asking, "How did you do it?" You did it by showing up. You did it by laying the next brick on sunny days, rainy days, when you were motivated and when you were bored. That's the key to long-term wealth. Let me tell you a story that perfectly illustrates this principle. The story of Ronald Read. Ronald Read was not a Wall Street wizard. He was a janitor, a gas station attendant. He lived a simple, frugal life in rural Vermont. No one knew he was wealthy. When he died at the age of 92, his community was stunned to learn he had left an $8 million fortune to the local hospital and library. How did a janitor build an $8 million fortune? Did he find the next Amazon? Did he invent something? Number. He did 2 things with crushing, boring consistency for his entire adult life. 1. He lived below his means and saved a portion of his modest income. 2. He invested his savings in solid, blue-chip, dividend-paying stocks. He bought shares in companies you've heard of, Procter & Gamble, Johnson & Johnson, Coca-Cola. And then he did the most important thing of all, nothing. He held them for decades. He reinvested the dividends, which in turn bought more shares, producing more dividends. He used the power of time and compounding in its purest form. There were market crashes in 1973, 1987, 2000, and 2008. We can assume he didn't sell. He just kept to his simple, boring plan. He laid the next brick. He wasn't a genius. He was just consistent. His secret weapon was his temperament. He didn't need the excitement. Excitement is expensive. Boring is profitable. Now contrast Ronald Read's quiet, unstoppable success with the loud failures of millions of traders who tried to get rich quickly in the same time period. They chased hot trends, they used leverage, and they listened to the news. And they lost. They had higher IQs. They had more sophisticated tools. But they lacked the discipline. They could not tolerate being bored. You must choose which path you are on. Will you chase the fleeting dopamine hit of the gambler, or will you embrace the quiet dignity and unstoppable power of the builder? You have a choice with your capital. Embracing boredom is an active strategy. It means automating your investments so you don't have to think about them. It means deleting the stock market app from your phone's home screen. It means that when your friends are talking about their latest speculative win, you stay silent, secure in the knowledge that your machine is working and your bricks are being laid. You don't need their permission to execute your plan. The ultimate transformation happens when the boring path no longer feels like a sacrifice. It begins to feel like power. It becomes a source of quiet pride. You are not just building wealth. You are building a monument to your own discipline. You have learned to fight your biology. You have built a plan. You have embraced the most powerful yet overlooked strategy of all. There is only one final step. It is the last evolution in your mindset. You must stop thinking like a person who has money and start thinking like an entity that directs it. Chapter 10. Think like an institution, not like an individual. This is the final transformation. We have waged a war on your biology, built a plan, forged a system, and embraced the discipline of boring consistency. Now we must complete the psychological evolution. You must stop thinking like a person trying to save money and start operating like an institution designed to accumulate capital. The individual investor is destined to fail. Why? Because for the individual, money is personal. It is tangled up in ego, hope, and identity. When a stock they picked goes down, they feel like a failure. When they miss a rally, they feel regret. A chaotic mix of personal feelings and headline news drives their decisions. The individual is a lone sailor in a rowboat, tossed around by the storms of the market, reacting to every wave. An institution is different. A university endowment, a pension fund, a major corporation, these entities are battleships. They are not emotional. A pension fund does not hope for a good quarter. An endowment does not have a gut feeling about a stock. They operate from a cold, logical, and legally binding document, an investment policy statement or a mandate. They are systems of rules, run by professionals whose only job is to follow those rules. They are designed to ignore the storm and sail a predetermined course. From this day forward, you are that institution. You are the founder, chairman, and CEO of a private financial entity whose sole purpose is the relentless accumulation and compounding of its own capital. Let's call it You, Incorporated. You are the CEO of You, Inc. Operate like one. Your final task in this training is to draft the founding document for your institution. This is your personal investment policy statement. This one-page document is the constitution upon which your entire financial empire will be built. It is the law. It is the final word that overrides all fear, greed, and biased thinking. It will contain these 5 sections. First, the mission mandate. This is the official objective of You Incorporated. It must be specific and long-term. Example: the mission of this institution is to achieve a capital base of $2 million adjusted for inflation by the year 2055 to secure complete and permanent financial independence for its founder. Second, the capital allocation doctrine. This defines your investment strategy in unemotional, institutional terms. Example: the institution will maintain a 100% allocation to a globally diversified, low-cost equity index fund to maximize long-term growth and capture market returns. That's the key to long-term wealth. Third, the contribution protocol. This governs how new capital enters the institution. Example: a minimum of 20% of all gross income will be automatically transferred and invested on a bi-weekly basis. This protocol is non-negotiable regardless of market conditions. Fourth, the governance policy. This sets the management rules, your rules. Example: the portfolio's performance and allocation will be reviewed once annually on January 1st. No tactical changes will be made in response to media commentary or short-term market volatility. The institution's strategy is permanent. Fifth, the distribution policy. This defines when and how capital can leave the institution. Example: no distributions are permitted until the mission mandate is achieved. Thereafter, distributions will not exceed a sustainable 4% annual withdrawal rate. Write this down, print it, sign it, place it somewhere you can see it. This is no longer a set of goals. It is the legal and operational framework of your own personal financial institution. And your job, as CEO, is to enforce it with absolute authority. When the market crashes and the individual inside you feels fear, your job as CEO is to look at the document and say, the governance policy states we do not react. When a new speculative bubble emerges and the individual inside you feels greed, your job as CEO is to say, this is not aligned with our capital allocation doctrine. It's not about what you feel. It's about what you execute. And you are no longer acting on your feelings, you are acting on corporate policy. This is the ultimate psychological shield. You depersonalize the process. It's not your money you're losing in a downturn. It's the institution's capital experiencing a predictable temporary fluctuation that is irrelevant to its long-term mission. You have separated your fragile emotional self from the cold, powerful, capital compounding machine you have built. You are the CEO of You, Inc. Operate like one. You have now completed the journey. You have transformed from a reactive, emotional individual who is a liability to your own wealth into a disciplined, systematic institution designed for success. You have all the knowledge, you have all the tools. The training is over, so we are at the end. But for you, this is the beginning. Let's review the mission. You've come to realize that your brain is your greatest liability. You learned that fear must be killed, that greed must be starved, and that impatience is a tax you will no longer pay. You've learned to create a machine that generates wealth for you while you sleep. You learned to stop making decisions and start executing a plan, to reject the herd and to embrace the unstoppable power of boring consistency. You learned to stop thinking like an individual and start operating like an institution. The battle was never against the market, it was never about interest rates or politics. The battle was, and always will be, against the emotional, reactive, and undisciplined voice inside your head. And today, you were given the weapons to win. So this is your challenge. This is your command. Tonight, you will write your rules. You will draft the founding document of You Incorporated. Tomorrow, you will automate one single investment. You will build your machine. From this day forward, you will operate from a plan, not from a feeling. You will stop being the person who reacts to the market and become the market itself, cold, disciplined, and relentless. This training is complete, but the mission continues. If you are committed to the path of execution, subscribe to this channel now. Join the community of builders who refuse to be average. Share this audiobook with one person who is still a slave to their emotions and needs to hear this message. And in the comments below, declare the first rule from your new investment policy statement. This is not for me. This is your public declaration to yourself. Your first act of execution. Your next assignment is to deepen your understanding. Acquire and read The Psychology of Money by Morgan Housel. It will solidify the principles you have learned here. There are no more excuses. The time for passive learning is over. The time for building has begun. Stop reacting. Start building. Your empire awaits.